already did. Now it's on there. Okay. And as soon as it pops up on there, then I know, oh. And we're there. And good morning.
Good morning.
How are you? You got to talk into it.
Oh, I'm so sorry.
You got to
Good morning.
scoot over that away.
I've got
I want you
it
away from me.
Okay. Now, I mean, okay, now I'm here. Can you hear me? Usually nobody has any problem hearing me if I'm trying not to yell into the microphone.
You're doing very well so far.
Okay, thank you very much.
So far.
Okay.
So, Cynthia, why don't you kind of introduce yourself?
Okay, well, Cynthia Burnett, and I've been in real estate for going on about 25 years, but up here it's been more like about 12 because we retired from the Little Rock area and just seem to keep on going because I love real estate and I love working with people and I just have a good time and I found my home.
You found your
So I'm
home.
happy being
Her
here.
forever home.
Yeah, it's my favorite home.
Well,
So,
this morning, our special guests are Brandon and Karissa Clemons with First Trust Home Mortgage Loans.
Yes, ma'am.
Yes. I was so scared I was going to jack that up. So scared. Well, good morning, guys, and thank y'all for being in here with us.
Good morning.
Good morning.
So y'all are based out of Heber, correct?
Yes.
Your office is in Heber?
Mhm. We work out of Heber Springs, but our home office is in Sheridan, Arkansas. We're a Arkansas-based company.
oh, wow.
Nice.
Yeah, that's
Okay.
great.
Okay. All right. So we got a lot of information for everybody today, and we've got some properties to highlight. So let's just dive right on in.
Okay.
We've all been taking notes and talking and all that good jazz. So Karissa, kick us off with, give us a little history about First Trust.
Okay. So First Trust Home Loans is an Arkansas-based company. We're based in Sheridan, Arkansas. We have local processing, underwriting, decision-making, and I have a dedicated processor, underwriter, and closer that I
Oh,
work
wow.
with, so it makes the
Right
process
there in
smooth.
your office.
Mhm. And we've been in business for over 20 years. I can't be exact on that, Brandon can though.
Yeah, about 21 years.
Yeah.
Oh, that's
Yeah.
good.
Yeah. So
So how many, I'm probably fixing to put you on the spot.
that's okay.
How many locations are there throughout Arkansas? Because as you know, I mean, we work with a lot of people from not Cleburne County.
Well, I'm personally licensed throughout the whole state and actually other states as well. I don't know how many offices we have in Arkansas. but-
More than 10 in Arkansas, but we also have locations in Illinois and
Oh.
Louisiana and Kentucky and
Oh, wow.
Tennessee, and I could go on, Oklahoma, places like that. So we have, we cover about 13, 14 different states right now.
Nice.
Oh, that is great. That's
Did you
great.
say Oklahoma?
Yes.
Okay, so I'm going to kick it off with a question then.
All right.
Do y'all have a program, and I've only have had this asked once, but do you have a program for, and I know I'm fixing to butcher it, for like the Native American?
Yes.
You do?
Yes.
Stop it.
We really do.
That's awesome.
That's
And I'm
freaking-
licensed in Oklahoma.
Okay.
Just so you know.
Oh,
Yes.
that is
Yes.
great.
We had one young lady that was the type of loan that she wanted to use, and this has been several years ago. And we were Googling, we were trying our hardest, and everybody that we would talk to, they kept telling us that we would have to get a lender out of Oklahoma.
Wow.
And so that's why when you said that, you just blew
Yes.
my mind.
Yes, ma'am.
That is freaking awesome. So can you give me a little detail about it, or is that really putting you on the spot?
That's really putting me on the spot, but he might know something about it.
Okay, Brandon, you're up.
There's multiple options. So FHA offers a program, and it's called HUD 184. And that's the
that
program.
was one of the
so that's the
terms.
most popular one. But there's
Okay.
also multiple different grant programs available depending on the borrower. So then that's going to be primarily in certain areas of Oklahoma. But we also offer the HUD 184 in Arkansas. So I don't have a lot of details. We originate a couple of these probably every month or so.
And you said a 184.
Yeah. Lower down payment
Okay.
really is the benefit.
And
there.
so say I was gonna use that.
Mm-hmm.
Is FHA the only one? Basically, if I was going to use the 184, can I go conventional or VA or anything like
No,
that? Okay.
it's an FHA program.
Okay.
Now, all the grant programs, those are specific, depending on where you're at, and you can use those grant programs for any conventional loan, government lending, or whatever. But the main program that we find is the HUD 184.
Okay. Okay.
Which I think you brought up a point that is so valuable for realtors. And that is that when you do actually sit down with someone, whether it's a buyer or a seller, primarily a buyer, coming into the marketplace, because we've got so many people coming in from other states,
Right.
that, you know, that's what's so important about saying the first thing you need to do before you start looking at properties is go ahead and check with a lender. And when you said that you've been in several different states, I'm sure there's going to be people that do recognize you or have worked with you before, which is going to be so beneficial. But that's really the primary reason why I always refer people to that, because then you can kind of tailor what's best for them. And I know that there's a lot of new programs out there too. So that's one of the things that I do. And even as seller, sometimes people don't understand that, but there's reasons for sellers to meet with, you know, a lender before they put their house on the market for a lot of different reasons.
Absolutely.
So, I mean, if y'all could maybe educate some of our listeners for that, that'd be really helpful, wouldn't you think, Jesse?
Oh yeah.
Yeah.
Oh yeah.
So what, like when someone first goes to you, how do you actually communicate with them and get them started to where you find out exactly what would be the beneficial, you know, program for them?
For a buyer, we're just going to sit down and ask them questions and find out what's the most important for them. Like a lot of times it's minimum down payment. Sometimes, you know, what's the best interest rate that we can get them, what program fits them the best. But we usually,
Right.
you know, we'll go through the application process with them, and that answers a lot of the questions, because that will give us their income, their assets, you know, like what kind of loan
Yes.
program do we need to be looking at. And so we'll just ask what their goals are, and then, you know, decide if we want to put them in a low down payment program. You know, is it going to be like 20% down? It depends on the product, the type of property that they're buying. Lots of different options on that.
Right. Oh, that's good.
The main thing we want when we're basically interviewing the buyer, we're trying to figure out what is important to them, their long-term needs, their short-term needs. But many times they come in and they want a conventional loan. That's what they ask for.
Right.
That may or may not be the right program for them. So we want to dig in, find out, you know, when are they planning on retiring? If they're retiring in 6 years, maybe a 30-year note, you know, mortgage is not right.
Right.
Or maybe they have money saved. This is real important because they have, you know, 20% down, and that's what they want to put down.
Right.
But they also have a lot of high rate credit card debt or an RV loan.
Yes,
and maybe
absolutely.
it's better to use their money to pay off some of their other high rate debt and put less down on the mortgage, which is going to be a tax deductible, you know, much lower rate.
Yeah.
So we just dig into all that with our clients, and then we issue a pre-approval letter, and then they have that buying power when they go out to make their offer.
Right, which is so much easier for
Yeah.
us as realtors to be able to do that. But so, do y'all have more opportunities for different types of loans and services that you can provide versus a standard, you know, the other type of a mortgage or?
Yeah, we do.
Because I think you're handled a little bit different, and that would be
Yeah,
good to
you know,
know.
during that conversation, we're going to figure out again what's best for them. So when Chris is able to originate the traditional FHA loans, VA loans, conventional lending, but then there's many other types that may be right for a specific client depending on what they're doing. These are non-QM loans. That's kind of the industry term, non-QM, non-qualified mortgage.
Okay.
Within that area, and Karissa can talk about it, but we originate a lot of DSCR loans. These are really popular, and bank statement loans are really popular. So, Chris, if you want to talk a little bit about what a DSCR loan is, this is the DSCR loan is going to be for an investor.
Oh,
Yes.
good.
Yeah.
Okay. Yeah.
Yeah, so the DSCR loan is going to be like someone that's purchasing an investment property. It can be either a short-term rental or a long-term rental. And what we look at on that is we're going to have the appraiser. When the appraiser goes out, he's not only going to look at the value of the home, we're going to look at what the rental schedule could be for that home, like other comparables in the area for the rent. And so, like, let's say that the mortgage payment on this loan is $1,000. As long as the rent schedule supports that, then we will not ask them for their tax returns or any income documents or anything like that. So it's the debt service coverage ratio that would qualify them from an income standpoint for that particular property.
Oh, that is
Yeah,
really
yeah.
good.
And it can be short-term rental or
Right.
long-term rental. We just need to know which way they're going to use it when we have the appraiser go out to the property.
So
That's awesome.
Yeah.
with that, you saying that you check, the rates for other rentals in the area and whatnot. So let's just take Gers Ferry, for instance. There's not a lot, there's very few long-term rentals.
Right.
There's more short-term rentals. So how do you look at the rates, because we're so limited on long-term versus short-term, like to determine, okay, the mortgage is $1,000. We check the rates and stuff, and if you can get $1,000 to pay that mortgage, then so basically, how do you confirm that information with us being so limited?
Okay, so I'm going to let Brandon take that one. That's
Okay.
actually an
Well, I seen him
appraiser's
shaking his
question.
head.
Yeah.
So.
Yeah, so first thing we're going to do is we need to know our market, and Karissa knows her market.
Right.
We're going to talk to the realtors involved, and we're going to, usually an investor is not going to buy a home if it doesn't cash flow.
Right.
So we don't see that very often because they've already done their homework before they buy the house. They know they're going to be able to rent this property for enough to cover their payment, really more than that, right? They want to make money. So when we order the appraisal, we're going to tell the appraiser to either look at it from a long-term rental standpoint or a short-term.
Okay.
And then the appraiser is going to return the appraisal with us with the value of the home. That's important. We want to make sure that the value is there. And then we're going to have, as Karissa mentioned, a rent schedule. So they're going to have comparables from the community of a similar home, short-term rental. If we ask for the short-term rental, if we ask for long-term, that's what we'll get. We're using a lot of short-term rental appraisers, though, appraisals.
Yes.
So, and the ratio needs to be ideally about 1.25. So they need to have a monthly rent more than their total payment. That's principal,
Absolutely, yeah.
interest, taxes, insurance, all those things.
Right.
But we can finance the home if it's one, and in some cases even less than one.
Oh, wow. That's really good. Yeah.
Yeah.
That's
So-
very beneficial for the family. There's so many people that are wanting to do investment property.
Yes.
Yes.
Yeah.
The other
Yeah.
benefit for DSCR, again, it's a non-QM program. There's no limit to how many properties you can currently own or have financed, where if you're getting a standard conventional loan, that limit's usually 10. With a
Right.
DSCR, you can finance 30, 40, 50. There's not a limit there.
Okay. Great.
And and as Karissa mentioned, the other benefit is we're not going to analyze your tax returns, your other rental properties, personal or business. We're just going to base the decision off of your credit and the appraisal and the DSCR ratio. That's the main factors.
Okay. That's awesome.
That's
That's
yeah.
really
It's a
good to
wonderful,
know.
wonderful
That's
program for
opening.
investors.
Yeah.
Yeah,
Well,
opening doors
when
for a
y'all
lot
sent
of
this
people.
all over yesterday, I was like, ooh, I'm gonna have questions.
We like questions.
You know, I don't really want to get into specifics on rates,
Right.
but I will tell you the rate for this program is comparable to a standard non-owner occupied conventional loan.
Oh, wow. Because usually they're a little bit higher up that scale.
Uh-huh.
That is really good.
Yeah.
And as always, rate's going to be based on the loan to value, right? How much you're
Right.
putting down, your credit score, many other factors. What is the DSCR ratio? Is it 1 or is it 1.5? These things play in. But for a good borrower with good credit with, a decent down payment, you're going to be able to find, in some cases, a rate better than a conventional Fannie Mae or Freddie Mac non-owner occupied.
Right.
And then you're going to have all the other complications with taxes and income analysis and those things,
Right.
which we don't on this program.
Which really solidifies to me the fact that you really definitely need to go in and sit down one-on-one with you guys and let them say, hey, here's my goal. This is what I want to accomplish. This is what I've got to do to get it, which it doesn't happen every day with
That's right.
investors or even people that's the first time they're starting out doing investment property. So that's awesome that y'all provide that.
Thank you.
That's
Yeah.
great.
The other program, good segue into this one. So that's more just for investors, right?
Right.
Or not necessarily investors, but it's for investment property. You can be buying your first investment property or your 50th.
Yeah.
That works for both.
Okay.
But when you're buying maybe a second home, and we have a lot of that in our area,
Oh,
right? Or a
yeah.
primary residence, and you're self-employed, right?
Oh,
So
that's 2 years, isn't it, where you have to see?
you start
Yeah.
looking at year-to-date P&Ls and K1s and statements, and that's a pretty difficult process for some self-employed borrowers. We offer what is known as a non-QM bank statement loan. So again, we're not going to dig into their tax returns, personal or business, and their K1s and do all that analysis. We're going to take a 12-month history of their business bank statements. We're going to average their deposits, monthly deposits. Then we're going to multiply that by an expense ratio of normally 50%, maybe less, depending on what their CPA provides, and that's their income. We're originating a lot of these loans. It's not really a new program, but it's become a lot more popular. And so, Karissa offers those as well. So again, this is be primary residence, second home.
Wow.
So with that being said, just use me as an example. If I having a business and being a 1099 independent contractor, and I come to y'all and say, this is what I'm thinking, this is what I'm wanting to do. Would y'all work closely with my CPA? I would just be like, hey,
Yeah.
CPA, call my lender and
Right.
Yes.
okay.
So we can, you just have to give your CPA permission, and usually they want
okay.
written permission, to
Oh, yeah.
to communicate
Yeah,
with us and things
definitely.
like that, so.
Because to be honest, I'm one of those people, I tend to tune things out, and I've done it before where I just said, hey, can I just have my CPA call you? Because I just walk into my CPA and I say, here you go.
Right.
He takes care of all of it. So if you start asking me my numbers and stuff, and I'm like, I don't know.
And I'm
And that's
the
how
same
a lot
way.
of business owners are.
Oh, they are,
Honestly,
Yeah.
Yes.
Yeah.
And so he's done it for me before. He's worked with the lender and with the attorney. He's right up in the middle of it, and he was
Yes.
like, nope, we're not doing that, we're going to do it this way, or whatever.
Yes.
So that's good to know that obviously with permission y'all would work with the CPA.
Absolutely.
Definitely.
Yes.
Yeah, that is.
Yes.
So that just brings up a whole nother topic
That's
for me.
okay.
I knew that. Her brain was just.
I know, I'm sitting over here looking at the top of the wall, and I'm like, my wheels are just going. So, are there separate programs, or I know that fly is
Yes.
annoying, for 1099 people? because I know I met with a potential buyer the other day, and you know, they wanted to talk owner financing and stuff like that, because he just looked at me and he goes, I'm a business owner and I'm a 1099, and it's like pulling teeth to get a loan.
So what we find a lot of times is that when someone's self-employed, you know, they write off as much as they can.
Sure.
So if we're going a traditional mortgage loan, then a lot of times the income that they claim is not enough to qualify.
Absolutely.
And so that's
Absolutely.
whenever we will use the bank statement loan, because then we can just look at their bank statements, see the deposits that they've made into their business account,
Right.
use the ratio that Brandon just talked about for their expenses, and then use that as their income to qualify.
So would that still fall under the DSCR,
No.
or just
It's a separate program.
separate.
Okay.
Still a non-qualified mortgage. DSCR is for the investors. Bank statement loan are going to be your self-employed. But you know, one way we do that is we look at 12 months of bank statements. We average out the monthly deposits. But sometimes businesses, you know, maybe they don't put all their money in the bank, or they have multiple accounts. There's various things. We also, a subcategory of the bank statement loan is a 1099 loan, where we just look at their 1099s. We don't analyze the deductions, tax returns, and all those things. So that's a subcategory of the bank statement loan. So we can either average their deposits into their bank statement, or we can just look at their 1099s and use an expense factor. Again, we're going to dig into the individual client, talk to them, figure out which way is best
Right.
for them.
Right, so you can tailor it to
That's
what
right.
their
To-
needs
to their
are,
needs. Okay.
Which to me is wonderful. That's
You know, a lot of businesses will not need these programs, right? They
Yeah.
qualify just by doing a normal income analysis on their business and personal returns. We do that every day.
right.
We'll look at that, and if we can't, you know, qualify them that way, then we have these other options available.
Right, right.
that's good to know that there's more than one option.
Absolutely.
Because I know until getting into real estate and, you know, purchasing a business and all of that, didn't realize the difference between a W-2 and a 1099 until I got ready to purchase something.
Right.
And then they started asking me for my numbers, and I'm like, I don't know.
Yeah.
You know,
I will
just-
mention too,
Yeah.
these programs do require the business to have been in existence for a couple of years.
Yeah,
So
that was going to be my
it's
next question.
it's not
Was,
for a
like,
new
longer than
business,
two-
a
two
new business
years or
owner. So
something.
we're looking at 2 years in
Yeah.
business
Okay,
for these programs.
okay.
Not DSCRs, that's different, but the bank
Right.
statement programs I'm
The
referring to.
The
Yeah.
non-QM, is that what you said?
Yeah.
The bank
Yeah,
statement.
okay. That's
Yeah.
what I thought, yeah.
So, would it be the same? There again, I'm using myself.
Okay.
Would it be the same with it being obviously having a business, having 2 LLCs, and being a 1099? Would it still be the same regardless? I feel like that's a dumb
You know,
question.
sometimes you have a person that may own multiple businesses.
Yeah.
Right, and we can use the bank statements or the 1099s from one business, 2 businesses, 3. We only use the ones that we need to use.
Oh, okay.
So we don't have to necessarily analyze all your businesses.
Okay. Oh,
That's
excellent.
kind of what I was trying to get at.
Oh, that's great. That is
Yeah.
great.
Thanks, Brendan, for reading between the lines there.
Yeah, it's so much to the specific individual situation.
Gotcha.
Yes.
Okay.
That's just incredible because y'all are separated out there, you know, which gives you so much more opportunities to send to a buyer and a seller.
Yeah.
Definitely, which is what we need right now because there's like Jesse was saying, so many people think there's just a standard, you know, FHA conventional
Right.
VA.
Yeah,
That's
yes.
it. That's all. Well, I can't do that.
Yeah.
You know, and you just go, well, now wait a minute. You've
Believe
got
it or
to
not,
find out.
a lot of you know, people out there that think about buying a home, maybe they're renting right now. They don't realize that there's all these options. The down payment assistance programs available.
Actually,
made that note.
You know, so a lot of people think you have to have 10% down, 20% down to buy a
They
house.
still do.
Yeah.
Yes.
And
They do.
I know.
you know, and They don't, right? So it just depends. I mean, do they need down payment assistance? Do they need, seller concessions? Do they need a specific program like a non-qualified mortgage or a bond program or, any type of down payment assistance? So there's all these options out there that the general public doesn't necessarily know are available.
Right. That's why it's so important that y'all are here today talking about this and sharing this, because not only does it, of course, benefit Jesse and I, but it also just lets everybody know it's okay. You can dig deeper,
Right.
because I think a lot of it is just what's been just instilled in our brain year after year after year, and it scares people because they think I'm never going to be able to have that, and that's just not the case.
It's not at all.
But it's being able to find that company and those individuals to be able to go and talk to. So,
Yes.
y'all, this is awesome.
Yeah.
Thank you.
So I do have a question here. What about a Scheduled C?
Not a problem.
Okay, because they have a Scheduled C, but not a 1099.
Right.
Yeah, we're going to take, in that case, we're going to move to the bank statement
Right.
part of that program, and we're going to take their business bank statements, pull 12, they're going to bring us 12 months of bank statements. We're just going to add all their deposits up. So a lot of businesses have credit card transactions, right,
yeah.
coming in, convenience stores, things like that. We're going to add all those deposits, multiply it by an expense ratio, and that's their monthly income used for qualifying them for the mortgage.
Wow.
So not a problem at all. That's
never-
actually very common.
Never knew that. Oh, really? See, I never had anybody explain it like that. I didn't know you could do that. That's awesome.
Yeah.
Had
I
you?
mean, no.
I hadn't either.
That's why yeah.
Yeah, this is like wonderful.
So, which I already gave you a heads up that I was going to ask this question.
Uh-oh.
But do you have a first time home owners program, and do you kind of guide them and lead them into, if they have no credit, they have no established credit to qualify?
Yes. So a lot of the first-time home buyer programs are going to be geared more towards the lower down payment options like FHA, VA, USDA, or the ADFA programs that we can do with the down payment assistance. But if someone comes to us and has no credit, what we're going to do is create a non-traditional credit file for them. And that's like if they have a 0 credit score. So we can use their rental history as long as they've got 12 months of rental history, utilities, car loans, payments for furniture,
Wow.
just lots of non-traditional type credit, and build a credit file for that person.
And you even made mention, because I know in today's time,
Yes.
it's kind of a biggie, that you can use their subscription histories, YouTube,
Yes.
Spotify,
Yes,
on and on and on.
yes,
That's wild.
And it's
Yes.
also, that's gearing it really more for a younger individual, because that is what they're inclined to, just like
right.
I was saying a little while ago, we've all been used to saying FHA conventional VA for so long, and now, we've got to dig deeper. But it's the
Yes.
same thing that the younger generation, or I should say younger, but, people that are under probably 40, that are looking for lake property and wanting to have a vacation way, just to get away on weekends and everything like that. They didn't even realize they could use this, because I didn't know it,
No.
Right.
Yeah, you only need 3 credit references. So if you're renting, and you've been renting for 12 months, there's one. If you have, as Karissa mentioned, all the other things, usually you have car insurance or Spotify, YouTube
Right.
TV, all these different things. And I think it's important for kids as they're transitioning from high school or college into, adulthood. They need to make sure that they, 2 things, right? They can start building their credit history, real credit history, by non, secured credit cards and some things like that. But also it's important that they start moving some of these things out of their parents' name and get them in their own name, because we find
Yes.
kids coming out of high school and they're going into the trades or whatever, and they're ready to buy their house. And not only do they not have credit, but they don't have non-traditional, because everything is still in mom and dad's name.
Right,
Right.
And they're paying it,
Yeah.
right? Because parents say, okay, your Spotify account is yours now.
Right.
but it's still in the parent's name or whatever. So I think
That's
it's important
really
for,
important.
for kids, again, transitioning from either high school, trade school, or college, to start getting some things in their name and start building their credit history, because, it's going to be difficult to finance a house if everything is still in your parents' name.
Oh, absolutely. That's really good.
And we have that conversation a lot, and I'm like, okay, so let's get these things moved over to your name, and let's talk
Right.
again in 12 months.
Right.
And then they're ready. So a lot of our conversations with the first-time home buyers and the younger buyers are educational. And like, let's make a plan so we can get you ready in the next 6 to 12 months.
Right.
And
So that's following into what I was asking, how would you guide them
yes.
towards it?
Yeah. So we're going to end that interview with our customers. We're going to have a deep, deep conversation, find out where they are, what do they need to do, and are they ready now? And if not, what can we do to help them to get ready?
Get there.
Absolutely.
Yes.
And with the credit card, where they build it up, where they put, I guess you put a certain amount of cash down, and then, okay, what I've experienced with some first-time buyers that have no credit, when they go and ask how to set this up, then sometimes they don't have those available or to recommend within their company. So is that something where y'all can go, look, here's maybe 3 different things that you might be able to get started in to start building that?
Yeah.
Absolutely.
Okay, because that's
Yes.
really important.
Yeah, most of your national banks offer a secured credit card or a student credit card,
Right.
and they immediately start reporting on your traditional credit report.
Okay.
So, we can help, I'd say almost anyone in a certain period of time qualify for a home mortgage. Maybe they have no credit now and they don't have anything in their name. Well, that's pretty easy, right? We get some things in your name, and in 12 months you're eligible. Well, maybe you have, bad credit. Like you've had something happen, right? There's something in your life that's caused you to get behind.
Right.
Again, there's never a situation where we can't guide you to qualifying for a mortgage. It may be 6 months down the road, and it may be 12 months down the road, and it could be longer, but usually not. Again, you have to reestablish your credit. So the things that you maybe you weren't able to pay on time, you start paying those on time. And again, we just have to look at the individual. But our loan officers are all, have a lot of experience in helping people, and they stay in touch, right?
Right.
And then when they get there,
Communication.
that when they, how they call in a couple of months, say, how's it going? Did you do these things? And most of the time they say, well, I didn't get all those things done, but I'm working on it. So we stay in touch. And then when that day comes, and when Chris has had a lot of these, where they finally get that pre-approval letter, and then they get that first home. And sometimes it's been, a 12 or 18 month process.
Absolutely. Yeah.
And we
But at
shed
least
tears
it's
at the closing table
Oh,
because we're
I'm
so
sure.
thankful, and
Yes.
so happy, and
Just
those
don't
are
give
awesome.
up.
right.
Yeah.
Exactly.
Yeah.
And it makes them feel like that's
Yeah.
not an impossible dream.
It's
it really
not.
can happen.
Yes.
That is great. That's great. I've got 2 people in mind already that have been
Oh,
struggling,
good.
so that's
Good.
awesome.
Yes.
Awesome.
So I'm gonna let Karissa and Brandon have a break, and I'm gonna let you talk about your highlighted property.
Oh, good. That's fun. Okay, well, I think the first one is some property that I have listed that's just right on the other side of the Edgemont Bridge. And it's actually, you turn on Mystic Mile, but it's the 2 roads that kind of line up the side. One's Sandfield and one's Treyway. And the unique thing about this land is that it's so close to water access, and you can even walk from the lot, this vacant land, right over to the water. So it's really nice, and it is centrally located, being within that area. And some of the things that the sellers and I have discussed is if you are able to go ahead and get the full acreage, and there's about a little over 3 acres there, give or take, mainly the main properties around 2.5. You can do anything from build one just detached home there, or you could put maybe 2 or 3 homes and use it, what we're talking about, for an
I was
investment property.
fixing to ask the
it
question
falls in
about that.
line, and it's really interesting because I've had people that wanted to do this but couldn't but it's beautiful property, and the nice thing about it, the way the land lays, is it so slowly slopes up. So when you get past the main road and up on the property, you have a nice view of the water, the area that's open there, and it's not restricted, so that opens up a lot of doors for a lot of people. And so it's just a beautiful piece of property, and I'm just thinking that I'm so thankful that y'all shared some of your opportunities, because I know I've had a lot of people ask about that. And then the other one was, are you ready to shift to the other one?
No, I have a question.
I thought maybe you might.
Yeah. So, of course, for you guys, let's just say, for instance, I wanted to purchase this with the idea and the thought of I want to do the whole acreage, but build like little cabins on it for short-term rental. Would that be something that y'all could do? Because I know you don't do just vacant land, but with this being an investment idea on purchasing the land and building these, is that something possibly?
Absolutely. That's going to be a situation where we partner with usually a community bank, a local Arkansas bank. In some cases, it may need to be a national bank, depending on the situation. But we'll partner with them, and they'll provide the short-term financing, the purchase of the lot or the land, right, and the construction piece, and then we provide the permanent financing for all of it together. So Karissa has relationships with the local banks in our community, and I have relationships with the national banks, and so it's usually a partnership.
That's incredible. That is great. You've opened up some doors for
That's
several people.
really good information.
Yeah,
That is
you know,
great.
we work closely with all of our community banks in our area because this is the type of financing they do very well. They offer good terms, but you know, in many cases, you know, we're able to come in and provide the permanent 30-year or 15 or 20-year, whatever time frame, and we do the permanent. So
Right.
kind of it works for the local bank and obviously for us, and in the end, the client.
Yeah, that's great. That is awesome. Yeah, I was thinking about that when y'all were talking about the other opportunities that you've got, and that's great.
Yeah,
Um,
it's important, you know, if you're going to be able to take care of, you know, the vast majority of the clients that come to us, we need to have partnerships outside because we can't do everything.
Right.
You know, we're a mortgage company, we're you know, and so that we have banks, and then, you know, if somebody comes to us, you know, there's so many things out there, and it's important to know who can help those clients, you know, and Karissa generally will have an avenue for nearly every type of purchase.
Because Karissa knows a lot of people.
Yeah.
A lot of
To have
people.
relationships with other
Absolutely.
lenders. And a lot of times people are like, oh, they're your competitor. Well, yes, they are, but we work together to do what's right for all of our clients. and
The
you
same as-
guys, and
yep.
that's what's
Same
most
thing with
important.
realtors.
Yep.
You know,
Yes,
and it really makes a nice little teamwork.
Well, yeah, 'cause, I mean,
Everybody is awesome.
I
Just
think
like
so,
for
too.
us, I mean, not all personalities are gonna jive.
No.
And so the fact that I can come to you with this idea and you tell me, okay, I can do this part, but let me make some phone calls and see what we can make happen on this part.
Absolutely.
And you forming that team for me and making it all work and just it being explained. Communication, I say it a lot, is key for
Absolutely.
everything.
It is.
And so I think that's huge. I'm so glad we played that.
Yeah. And not only, this is the one thing that is also beneficial because, you know, not only do we have the opportunity to just pick up the phone and just call, but now we can text, hey, I've got a situation, I need to talk to you, when can you meet? Or I need to schedule a time, maybe like an hour, and, you know, bring my buyer or seller in and talk with you. And that means so much. And it also, once again, like I said, it gives those individuals hope that, hey, maybe I can do something.
Right.
Because, I mean, so many people just say, well, I just can't
there again, like I said in the beginning, this is all educational in the fact that y'all took the time out, because not only are you educating our viewers, you've been educating me and Cynthia too.
Absolutely, absolutely. Because you learn something new every day, and if you don't, well, you know what the alternative.
Yeah. Yeah.
Yeah, and we're happy to meet with clients in your office too. Like
Okay.
if it's easier for your client to meet here, then we will come here and we'll do whatever we need to do.
Oh, that's great.
Yeah, that's awesome. Thank you.
That's great. I am a little surprised we got Brandon here not saying anything.
He's not. Okay.
We're
Ready to
happy
go
to
to the
come.
next one?
Are you ready?
Oh, sure. I'm ready.
Let's go.
Because I know we probably have a lot of other things to cover, but the next one is,
Yeah, 'cause we're not finished with these two.
next property is just an
Don't put me on the spot.
They noted to put the septic over close to the shop area in case someone eventually wanted to go ahead and put a pool in. And you've got that, not having to worry about your septic lines and things
Being
of that
in the
sort.
back, it's on the side. Yes.
But you can tell when you walk through it, there's a lot of thought put into just actually the way the whole floor plan flows, including that it's a split floor plan and things like that. And it allows a lot of really entertainment area
It's right at the entrance of Devil's Court Park. You never have to get on the main highway. And it's an upcoming kind of subdivision. It's got some, I don't want to say older homes, but older homes, in there. But it's like, geez, in the last year, 2 years, there's 1, 2, 3, 4. There's at least 5 new constructions in the last 2 years. Yeah. Right.
Awesome. Yeah.
So me and Clint, we done a TikTok video on it, and he was like, "What do we do to, emphasize and really showcase this front porch. And I was like, you're going to stand at one end and I'm going to go to the other and I'm going to run all the way across it. I was like, so that they can see that it goes all the way across, but it's also wide enough that you can put a table and a couple of chairs or a couple of rocking chairs. You can put more than one seating area just on the front porch.
Yeah, it's beautiful.
Yeah.
So I'm obsessed with the front of that house. I mean, I love the whole property, but how he done the contractor, how he done the front of that house is unbelievable.
And then I'm kind of partial to the breezeway. I just have
I
always
love the
liked,
breezeway.
I've always liked those added to homes. But the cool thing about that is that when you do walk out of the kitchen and like hearth room or regular dining area right there, then you pass through. And it's so cool because they have gone ahead and created like a little area where you could put like either brick or rock, finish it out, have a little seating area there to connect all of the backyard and everything. And they've already put, I guess is that pea gravel that they've already got down in the back. It's like it's not really asphalt, but I think that's.
I'm not sure what that, because it's little bitty tiny like little rock, but it's not in the backyard. It's between the house and the shop.
Right, but there is some kind of that they put, which I guess they've just recently added.
Yes,
And that is really cool. Because
We're
you
just
could-
waiting on the sod to come in.
Yes, because you could put easily, like a little seating area out there too, plus having, a whole outdoor area for cooking and entertaining. I mean, there's just so many options, but I
Yes.
just love that because it's just.
Well, how unique is it that a new construction already has a 30 by 40 shop?
A garage plus a shop.
That's
mean-
what I said it's about.
Yes. Well, in all of his previous homes that he's built with the garage, with the breezeway, something similar to this, but all of his feedback from previous homes was, I wish there was a shop, or is there enough room to build a shop? And so he told me that this next one that I'm building, it's gonna have both. And so I was thinking he was just gonna do like a small little one bay, shop. And when he told me it's a 2-bay and it's 30 by 40, I was like, okay, you really did it on this one. Barger Construction. Yep. He has done several homes in the area, and he's waiting for this one to sell so that he can build it.
They have a little bit of a
A
curve.
little bit of a
And
ramp,
it's just really cute. I mean, it just sets off.
and they're the
the style.
bottom crank rollout,
Yeah.
which I as a
love
short person,
Yeah.
Yes.
love those.
Yes.
Well, and it's easy than having to go, and let
Yeah.
it just wriggle it out,
Yeah.
But it's got a lot of really cute little touches that you can tell he really had some thought into it, which is nice. So we've got a couple of those. Hopefully we can share people looking at it and enjoying it
Absolutely.
as lake life continues.
Yes, ma'am.
Yeah, and that house would be eligible for really all forms of financing.
Yeah, that's kind of what I was hoping, definitely.
FHA, VA, conventional, non-qualified, all those things would be available for a buyer for that
Yeah,
house.
yeah.
Okay, so I'm gonna step out on another limb for you.
That's okay.
How would, I know I'm gonna get laughed at when I ask this question. How would how would a first-time home buyer qualify for this house?
Yeah. You can take that.
Oh,
You want me-
that's a good one.
Do you mean like what program? Or
Yeah, if I was coming to you and here's what I got, here's my stuff, what
Okay.
little I have, here's what I got.
Mhm.
This is the house that I'm really looking at. I want to say this is probably going to be my forever home.
okay. So we're gonna look at, first of all, how much down payment would they want to put? Okay.
Okay.
And so we can look at FHA, was gonna be the least out of pocket as possible unless it's a veteran. If it's a veteran, then you know we can do 100% financing for them. You know, we're gonna just look at typically like their debt to income ratio, like what's their income, those types of things.
Uh-huh. Yeah.
So, because this program gets talked about the least,
Okay.
rural development.
Okay. We're gonna look at, on your rural development, they're first gonna look at their family size.
Mm-hmm.
And then the family size is gonna determine what their max income that would be eligible for our county. And so as long as we can, you know, as long as they make at or below the county income for
Right.
their family size, then we can look and make sure that their debt to income ratio is going to allow them to purchase this home.
Right.
Did that answer the question?
Yeah.
Mm-hmm.
Okay.
You know, a lot of, you know, this is obviously you know, generally a little bit more expensive than your average first-time home buyer home.
Yeah.
Right.
But
That's
we
why I
s-
said I was throwing a
but
curveball.
but we see that quite often. I mean, in some of
Yes.
our markets, this is the price of an entry-level home.
Absolutely.
Yes.
You know, so we just need to determine, you know, their savings, right? What do they have? Do they need down payment assistance? Because you can get down payment assistance on a home in this price range. So, you know,
Really?
there's various options. You know, we look at ADFA, right? We have the first time home buyer program, which is Smart Start, but we also have other ADFA programs. And with those, we have the move up and some of these other things, which much higher income limits for the borrower. They can make, you know, well into six figures and still qualify for these programs. And with that would be $15,000 for the ADFA DPA, the down payment assistance.
Yeah, right.
So it's going to be difficult to buy this home with no money out of pocket.
Right.
But we can certainly limit how much they would need. I mean, FHA is 3.5% down.
Yeah. Yeah.
But with the ability to get some down payment assistance, maybe they don't need the full 3.5%. Maybe they can get a gift from mom, dad, grandma, grandpa, or whatever. So we can find a program that works with maybe partially it's a gift, maybe some of it's from the seller, some of it's through a DPA,
Right.
and then we figure out, you know, so could you potentially buy this house as a first-time home buyer with very limited out-of-pocket expense? Absolutely, you could.
Okay. Well, let me throw another one in here for you because we get a lot of people, like I said, from out of state. And so in different markets, they'll come in and they'll sell their home. And, you know, their home might allow them to be, you know, make close to $1 million, you know, profit. And then they come here and they want to pay cash. And so they'll go, well, okay, I'm going to pay cash, but I wonder if that's going to be better or if I should pay a large amount down and then finance a small amount. And that's something else that I always tell them, you know what, that's something you need to go and talk about. So would that be something that they could possibly benefit from even more if there's a way to do a cash purchase and still get a lot of benefits?
Yeah, we see that a lot, especially people moving from out west. We have a lot of folks moving into Arkansas, right, to retire, or maybe not retire. Maybe they're just moving
Right.
in other places, right?
Right.
People are moving into Texas, people are moving into Tennessee and Arkansas at a very high rate, and they're selling a home, or you know, they're leaving a company and they've got severance, or there's all these different factors. So they have maybe enough money to pay cash. And many times they want to do that. They think, you know, and I think there's some truth to it. They can close really fast,
Yeah.
and it gives them, you know, a little bit of negotiating power as a
Right.
cash buyer.
Absolutely.
The thing about that is over the last 10 years, the S&P 500 has averaged 12.2% per year.
Oh,
So you spend your cash
Yeah.
and you bought your house, but we can help them come back in and finance the house after closing. It's called delayed financing.
Oh, okay.
So it's become a lot more popular. It's not new. It's not a new concept. But basically, for the first 6 months of ownership, we can come in and do a cash out refinance on that property and get them up to the amount of money that they put in it. So when they close, let's say that they paid $500,000 for the house cash.
Right.
We can finance up to $500,000 using delayed financing. Now, what's the benefit of delayed financing? Normally, you have to wait until you've been on title for 6 months to get a cash out loan.
Absolutely. Yeah.
This allows you to do it the day after you close. You can apply for a delayed financing cash out refinance. So why would you want to do that, right? Well, let's just say, I'm just throwing out a round number. Let's say 7% is the interest rate. The S&P's done 12.2% over the last 10 years. So is there a benefit to pulling your money back out and putting it back into investments?
Absolutely.
I think that there is.
Yeah.
The other benefit is the interest in most cases is tax deductible.
Right.
Right.
So if you're borrowing at 7%, let's say you're in a 30% tax bracket, your after-tax rate of interest is 5.2%. So now you have a mortgage at 5.2% after tax, and your money's earning an average of 12%.
Right.
Sometimes more, sometimes less, depending on, but over time, 12.2%. So we're doing, originating a lot of these for cash buyers. In our market, cash purchases are very common.
I was gonna
It's
say,
a large percentage,
I-
some
the
months
majority are for
more
me.
than others. Or maybe, you know, a lot of people, they have the money already invested, right? So they go withdraw the money and buy the house. And certainly that they can do that, and we can still come in for delayed financing. Or maybe we talk to them up front and say, just leave your money where it's at.
Right.
Let's take care of a mortgage. Maybe we use part of your money to get you the best possible financing terms. Maybe you do take some money out of your account, 20%,
but not the whole amount.
but
Right.
not the whole amount.
Right.
Because,
Because you can benefit from that tax wise as well. You know, 'cause-
Absolutely.
you
I mean,
know.
we can close a traditional loan in 15 days.
Okay.
So is paying cash, how much quicker can a cash purchase happen than one with a 15-day conventional loan? That's not much difference.
That's not much difference. No,
So
it's not.
maybe don't take your money out where it's invested.
Right.
Because when you take it out, right, what is that going to mean? That's now you've got some tax
Oh,
issues.
yeah, sure
Because
do.
all those gains over the years on that money, now it's come, you know,
Yeah, oh, absolutely.
come there. So do we just finance it up front, or, you know, do they pay cash and then we do delayed financing? It depends on the
And a lot of
individual.
people do not understand that. I've had several people and relatives that have done that they've sold a house and then they didn't realize the tax issues that were going to
Yes.
appear. And this again goes back to the fact that I try real hard to stress with everybody I work with, please go and talk and find out what your options are.
Right.
Because it changes, you know, almost monthly. And there's always a change. And also it's hard right now at this day and time to talk about interest rates because there's nothing really solid because there's a lot of change. And then depending upon how you're financing it, that can also change the interest rate. And so it's just, to me, it's just so beneficial for people to understand, don't be afraid to go in and talk about this.
Oh, it's very important.
It is. It's very important. So, I mean, once again, I'm just so glad you're sharing all this because I know that there's some people out there that really have not heard this, and it's really good news for
Well,
the
I
majority of
didn't know
people.
that there was a such thing as a delayed financing,
Yeah, I really
Yeah.
did not either. And that's something that
because I thought when it was done, it was
it's
done.
Yeah.
The important thing about delayed financing is it's a 6-month window that you have to do that. It's the first 6 months when delayed financing is an option. Now, sometimes people will buy a house and then renovate, add on, do all these
Right.
things. So it's not necessarily going to work for that because, again, we can only finance what they put in it originally,
Right.
The
Absolutely.
acquisition
Yeah.
cost.
the acquisition cost.
Right.
So in that case, we may need to wait the 6 months and then do a traditional cash out. But it's a tool, right?
Right.
It's an option.
Right.
And really, I would stress and encourage everyone to talk to your financial advisor, talk to your CPA. There's a lot and we work with both,
Right,
right? As a lender, we'll talk to your financial advisor, we'll talk to your CPA. Chris and I have a lot of background because we were in banking for years, so we know some.
Yeah.
But again, each individual's
It's
could be different.
Yeah,
Everyone's different.
it really is.
And- right.
Just like there's no two realtor transactions that are the same. I mean,
No,
you can
Amber.
have
every
similarities,
transaction's
but
gonna be
there's
different.
Yes.
it's waking up in a new world every day.
Yeah.
I mean, I enjoy
Which is
it.
what makes our job so
Yeah.
rewarding.
Exactly.
Well, and I will say that for myself, the fact of just hearing you say that with permission, you would talk to my CPA
Absolutely.
and say, this is what we're looking at. And, because he has all the numbers and he knows all the stuff.
Yes.
So don't ask me
Right.
because I know nothing.
Yeah.
Right, which
Yeah.
is that's very helpful. I'm the same way. I'm like Jesse. I tell you, it drives my husband nuts, but I put everything together. I've got spreadsheets. I've got all of my, for me, what my deductions are and everything, and I just take it to him and go, here you go. And I've done that for about 39 years with him. I've been working with him that long, so he obviously knows everything about our financing and everything, and that's so helpful to know that you can speak with him.
Yes.
Yes.
Yeah. So there again, I love keeping y'all off guard.
It's okay.
So Brandon made mention earlier, and I wrote myself a little note to remember, because I know for myself, I can only speak for myself, I have been asked so many times about gifts.
Yes.
Oh yes.
If I'm going through the loan process and my grandmother gifts me $5,000.
Yes.
Kind of go into the detail with that, because when I try to, they look at me like I'm crazy. And I'm like, no, but you have to be able to prove that that was a gift and who it came from and, all of that. So that's why I kind of wrote that little note, because I was like, I know I get looked at funny when I say, well, my grandmother's just going to give me that money. Okay, that's called a gift,
Right.
and you can use that,
Absolutely.
but
Okay. So we do gifts all the time. And so what we recommend is that we do the gift at closing. And when we do a gift, we're going to have the donor, sign a gift letter. And, basically saying that the gift does not have to be repaid and how much the gift is, and we're giving it to whomever the buyer is. And so everybody signs that gift letter. And then at closing, what we do is we get a copy of the cashier's check from the donor, made payable to the title company, and the amount of the gift. So,
Very
Yeah,
simple
or a
process.
wire.
It's very
It can be a
simple.
wire too. The key is at closing.
yes.
If the gift, and again, if you're thinking, talk to your lender first. Don't go start asking for the gift and transferring money before you talk to your lender,
Please.
because that makes it more complicated. Not
That-
impossible. It
That-
makes it more complicated, because if
Absolutely.
the gift is done prior to closing, now we need to verify the donor's ability to give.
Yeah.
Right.
And so we're going to ask your grandmother to provide their bank statements to us, and they don't like that.
Absolutely.
Right. So if you structure it right, gift at closing to the title company from the donor, it becomes very simple. And gifts are allowed on most programs.
Yes.
so with that being said, and y'all are saying do the gift at closing.
Correct.
So this is an agent question.
Okay.
So any funds that are going to be taken in, dispersed, whatever, we like to see it on the settlement statement.
Correct.
So if the gift is being done at closing, does it still show up on the settlement statement?
Absolutely. It's a line item on the settlement statement.
Okay.
Yeah.
Okay. So it'll still be in there. It's just not been given
Right. So,
until.
right. So what happens is if they take, and for instance, I just had this week. They had a $3,500 gift from a family member, cash. Okay?
Oh no.
Cash is not good.
No.
So anyway, so they had gotten a cash gift from a relative prior to doing their loan application. So we get their bank statements and we see a $3,500
deposit.
large cash deposit. Well, we have to source that, and you can't really source cash, but it's a gift. So we did work around it. We ended up backing out the $3,500, and now we're getting a gift at closing. But the key in all of this is let's talk to the lenders first and be very transparent with your lender about what you're doing, how you're getting your funds to close, because it is just so important that we know all the details so that we can help you structure it properly.
Right, absolutely.
But we did work around it. It worked out. But just if you're buying a house, please avoid cash deposits.
Yeah, we don't
Yeah.
deal with cash.
No.
Yeah. So, but it worked out. So.
Yeah, and maybe also don't trade your car in during the loan process. Maybe not take out a new
Oh,
credit
no.
card.
Yeah.
These
Well,
types of
new
things.
debt.
Let's.
Yeah, we
Well,
tell
that
them.
was fixing to be what I was going to follow up with.
Yeah, we tell
Our
them all the time.
all-time favorite discussion that typically does not get listened to is if you're in the process of purchasing a home with a mortgage, don't buy a piece of bubble gum.
Yeah, exactly.
If you've got to finance it, wait till after,
Please.
because it messes everything up, and it's basically having to start over because now your debt to ratio income is completely different, and if you put a down payment on this new car or this new furniture,
Your assets are different.
it
Yeah.
causes a huge tidal wave.
The most common is someone trading a car, right?
Yeah.
And
Oh, yeah.
you know what? Well, I traded my car in. Yeah, okay, but your new car payment's $200 more. Or they need things for a new house. They need furniture. They need appliances, so
Absolutely.
they go ahead and buy them at Home Depot on credit.
Yeah.
And you had already pulled my credit. Well, we're going to pull it again right before closing because that's part of the
to
process.
make sure nothing's changed.
And-
I always tell them that.
Yeah. We do too, but they still sometimes
do.
they forget.
But
And-
now
and-
some of them will. Some places, if they are up front and let them know what they're doing, I realize I cannot get this until after my loan, the closing takes place and everything. Some places will hold those items, and I've had a lot. Yeah, they'll put them on hold, like if it's like a living room set or something. They'll go ahead and hold it, and then they'll tell you to go ahead and come back and pay it after your closing. So it'll hold it. You just have to search around to find these, businesses, but they will do that.
Well, I was going to come back with, because we're, talking about don't trade in your car,
Right.
don't, none of that. But what if I sell a vehicle? Say I've got 3 vehicles, I only need 2, but I'm buying a house, getting a loan. Well, I don't want to move this 3rd vehicle. I'm just going to sell it.
Okay.
Does that, obviously I'm going to tell y'all, hey, look, I'm fixing to make this deposit because I just sold this truck out here. It's going to be a $10,000 deposit as long as I tell you it's a check. I'm not
It's not
depositing
cash.
cash.
That's my question. Is it a check?
Yeah, we've worked with all types of
Yeah.
sales.
Yeah,
As
it
long as
happens
there's a
all the
bill
time.
of sale,
Right.
and we can source the money. It's not a problem, and you can sell horses and RVs, boats. Again, is there a bill of sale? Can we get a value of what you sold? Because again, the secondary market's going to look and make sure people aren't selling something that's for a lot more than it's worth,
Yes.
right? Because then what they really got was a gift.
Absolutely.
And we should have just approached it as a gift to begin with.
Right.
So they're going to kind of make sure we source those things.
Right.
And if you're selling a car, we can go out and get a Kelly Blue Book or an NADA, make sure that you're selling it for the right price. And then there's money changing hands, not in the form of cash. That's not a problem.
Right.
But
no
again,
cash.
And make
Would
copies
rather
of
they wait
everything
till after closing,
to
but
finalize. Yeah.
to do anything.
Yeah.
But
Yeah.
we can work with that, yes.
But a lot of times people need to sell those items to be able to have their funds to close, and we do
Right.
that all the time.
Yeah.
Right.
As long as they track what they've done, just
Yes.
make copies of everything. On just a bill.
Communication and
Yeah.
paper trails. That's
Oh,
what
yeah.
yeah.
Usually we find it out when we pull their bank statement and there's a cash deposit and they sold something for cash. That is very common.
Yeah.
Yeah.
And then they go, oh, I forgot.
Yeah.
That's right.
But could you still use, even if it is a cash deposit, the bill of sale and all of that to, no?
Gets
to-
difficult when it's cash.
Okay.
So they really do not need to sell it for cash.
So if I sell you a truck and you're paying me, I'm going through this process. It needs to be a check, cashier's check, wire,
Money order. Yeah,
something like
something.
that. Do not put dollar bills in my hand.
Absolutely.
It, especially if you need that money to close.
Gotcha.
Right.
If it's separate from you've already got your savings and it's been in your account and that's what we're using to close and this large deposit comes in and it's cash, we're going to back it out.
Oh,
Just
yeah.
back
But
it
we'd still
out.
be okay
Yeah.
if they have but if this is the money that they are needing for their down payment or their closing costs, then stay away from cash.
Yeah,
Yeah.
absolutely.
Gotcha. Okay.
Yeah, absolutely.
Yeah, because if
Or-
we can't source it, we just have to back it out of their balance, and whatever's left is what we can use, and that's a lot of times that's enough.
Yeah, but
Okay.
sometimes it can throw it off too.
Right,
So
exactly.
Yeah.
So we just say avoid it, because then it just avoids the whole thing.
The whole
But-
thing.
But sometimes it's okay. It just
So-
everything's different.
Is there something else that y'all wanted to share that we haven't touched on?
Krista, you can talk about our second look program.
Oh,
Oh, yeah.
there's
You
my
want-
note
Okay.
right
Yeah.
there.
So, First Trust Home Loans just rolled out recently a second look program. So if you guys have a client or anyone has a client that's doing a mortgage with another lender and for some reason it's going south, and for some reason they can't approve the loan, we can get all those documents, including if they've already done the appraisal, then that's when it's really helpful. So if they've already done the appraisal on that, then we're going to pay for the transfer of the appraisal to our company, and then use that appraisal. But we want to get all of the documents from that lender or that customer, and we will take 24 hours to review the file. And if we can approve it, we're going to tell you yes or no within the 24 hours. And then if we can approve it, we're going to close that loan in 8 days.
That's
Okay, that's awesome.
wild.
Yeah.
The other thing
Yeah.
that the average individual, I think, doesn't really realize is that it's a benefit to have your underwriter, your processor, everything right there.
Absolutely.
Either within a phone call or just down the hallway. And that is
Yes.
so beneficial, and people just don't realize that because you have the freedom to go in, or even if you're looking at the underwriter and you want to go down there and talk to them and say, hey, look, we just had this happen. How can we, like you were talking
Right.
about, if somebody sells something and they bring it to you and you're like, oh, let me
Yeah.
go down the hallway.
Yeah.
But that's a lot better because so many of the, like you were saying, national companies and things like that are somewhere people will use them over the internet. It's very, very hard to get any kind of an answer within a timely fashion. And here again, you don't have that individual contact.
Right.
Because you'll pick the phone up and try to call, then you'll end up with somebody that you have to re-establish what you're doing
Right.
and everything. So that is really excellent. I know when you mentioned that, I started to highlight that again, how very important that is.
It is, and local is very important, like to have it all local, but even having a dedicated processor underwriter, like we all
Yes.
know our part.
Absolutely.
And so, like, if I need to call Melanie, my underwriter, and just ask her a question, like, I know what she's going to say, but I'll just ask her just to be
Oh,
sure.
yeah.
You know what I mean?
Oh, yeah.
Or you know how they look at things, and that's
Right.
not going to work. Let's do it this way. So I think it just gives you a lot of insight on how to
Absolutely.
files and
Well, a lot of
That's-
times
yeah.
you start down a path with a mortgage company and they give you the pre-approval, but then something in your life changes.
Absolutely.
You bought a car, forgot to tell anybody, or you had a job change, or the company, they approved you and they shouldn't have, right? Or when it came to the condition phase of the loan process, you weren't able to provide. There's so many different reasons,
Oh, yeah.
and we're not going to be able to do every one of these. We know that, but we have a lot of options with our non-QM programs, whether it's credit, appraisal, all these different things. So we're going to be able to help a pretty large percentage of these clients. But the thing is, we're not going to drag them down the road 2 or 3 weeks to let them know. We're going to let them know in 24 hours.
Right.
Now, if the appraisal's done and the title work's done, which in many cases it is, we're going to be able to turn this around in 8 days.
Yeah.
If the appraisal's not done, that's different, right? We're going to have to wait
Right.
on that. If the title work's, not complete, we're going to have to wait on that. But many times these deals are right at the closing, right? So there's a contract. There's a date on that contract.
Absolutely.
Buyer and seller have agreed to this date Sometimes you can't move it. And so being able to find a new lender midstream and still make that closing date is what this program's designed for.
Which is great, which is great.
That's
And
cool.
it's kind of like, when I first sit down and talk to people, whoever I'm working with, whether it's a buyer or seller, I explain to them what actually a realtor's role is, because we do have to work with so many different people, and it's just like, it's sometimes it's hard for them to imagine that we're sitting there trying to coordinate everything and making sure that whoever we're working with, whether it is a lender, whether it's a appraiser or an inspector or a surveyor, I mean, we've got to be on top of all of that,
Yes.
which goes back to the fact that if you do have something come up, just like with an inspector or anything, you can pick the phone up and call them. And it's the same way with your lender. You want to be able to call them, and maybe within like 24 hours, because everybody works. We know that. It's hard to get an answer earlier than that, unless you're real lucky. But, and so it's very important for them to know that that's why we have to have communication so strong with them, because we're in constant communication with everybody else that we work with. So it becomes this major team, but we're kind of like the person that is guiding everything to move along.
Yes.
And it's super important, just like y'all have to deal with everybody too, whether it be another lender or whether it be, a local bank, like you said, or whether it be just people that are in your processing area. And that's just so beneficial. So I'm just really glad to know that everything's right here, or maybe in Sheridan, which is just a phone call away.
It is.
Yeah.
Yeah, and I mean, Sheridan, it's not like it's 5 or 6 or 7 hours away. I mean, it's just right down the road.
Yeah, that's just
So-
real close to our deer camp. So see, I could just drive by and do business on my way to deer camp.
Oh, goodness.
And then there was another program that I wanted to talk about, like for our veterans, for the VA loans, we're offering $750 off of closing costs for any veteran that's doing a VA loan.
That
That's
is
for their
awesome.
service. Yes.
That is awesome. I need to make it, because that happens a lot up here, especially with, vacation, like a second home, or people that are moving, like we did. We moved from
Yes.
the North Little Rock area up here permanently, and at that point, you just don't really always know what's available. You have to research, which is what we did. But VA is very important.
Yes.
Yeah, I think it's especially important for a veteran using their VA benefit that they work with a lender that has experience with VA loans, because
Absolutely.
they're unique in many ways. There's a lot of things you can do with a VA loan that some lenders don't realize. And definitely a lot of veterans don't realize. I mean, you can have more than one VA loan at the same time. A lot of people don't think that you can.
Right.
I didn't know that.
But so if you're leaving, let's just use our example earlier, you're leaving California and you have a VA loan out in California and your house is for sale out there or whatever, but you need to buy here because you got a new job here. A lot of people don't realize you can potentially get another VA loan at 100%.
Right.
So there's some calculations we would do, and we would help them with that. And there's other ways to use seller concessions with a VA loan. You can, it's not like the other programs.
Right.
So you may be able to use more than necessarily what the limit would be. There's just, again, with a VA loan, make sure you're working with a lender that has experience with them.
Yeah. And the other thing too with the VA, I found this out many years ago, but if you have a parent that has been using a VA loan and they've successfully paid off their loan, or they're not using it at that time, they've retired and whatever, they can offer that loan to one of their children to use. Is that correct? Is that still in place?
I'm not sure about that.
Okay, yeah, I've heard that if they're not using it, they can turn that VA over to one of the kids to use. And
I'll do some research on that one.
yeah,
I'm not
research
sure.
that out for me, because I've seen it work a couple of times, that's benefit to people that have issues.
I know they can on their schooling funds
Yes.
and stuff like that. I do know that they can do that on that program. I've not ever heard
mortgage.
of the mortgage end of it. Me being a Army brat and all, I had access to my dad's GI schooling funds.
Yeah.
but it not ever the mortgage part of it.
Yeah,
So
I believe that's true, but check into it because that's beneficial to some people,
Yeah.
especially if they're doing a first time buyer
Yeah, we'll check on
situation
that.
too. That's pretty cool.
can you refi a VA loan?
Yes, ma'am.
Okay.
The easiest refinance loan
Yes.
in the business is called an IRRL, which is a IRRRL VA refinance, an interest rate reduction refinance loan. Very, very easy, no credit, no appraisal.
Because it's a governmental.
So you're going from your
Yeah.
existing VA loan to just a new VA loan with a lower rate. That's when you would do that because
Yeah.
it's just a rate term refinance. If rates go down, you finance another VA loan, and we would originate in our business, we call it an IRRL.
Yeah.
Yeah.
But it's just an interest rate reduction refinance loan. VA offers that, and they have other types of refinances for other purposes too. But that's the one
No
that's.
idea.
So if you're a veteran and you have a 7% rate and the current market's at 6, call your lender,
Yeah.
Yeah.
Get it changed. Yeah.
and
exactly.
in just a couple of weeks they'll have you a new payment and a new rate.
Yeah.
You just
It's awesome.
blew my mind on that one. Okay.
Well, a lot of people don't, like you said,
They don't know.
they don't know.
Well, and I don't think they know to ask those
Right.
types of questions.
Right.
And that's why I'm trying to ask all of the goofy questions and
They're
whatnot.
great questions. They are not goofy, I promise.
Well, to me, I feel goofy asking them, but I didn't know that you could refi a VA loan.
Yes.
I mean, I knew you could on any of the other ones. I just with VA being 100%, I didn't know if that was an
Yeah.
option.
Yeah, and you can roll in the closing costs into the loan too. So if you don't have the money to pay it,
Yeah.
you can do that. And FHA also offers a lot of streamlined programs, kind of like the VA IRRL. FHA has streamlined refinances.
Yes.
Very beneficial to the client. Less money out of pocket, less. You may not have to do an appraisal. So all programs, well, not all, most programs have forms of streamlined refinance options.
Yeah.
Now, again, they're all different. Depends. Do you want to finance the closing costs or not? Do you want to utilize the current market value? Are you okay with the original value? Do you want cash back or do you not? All these things we have to talk to the client about. But streamlined refinances, we haven't been in a what we would call a traditional refinance market lately.
No.
But we still do a lot of refinances because right now in America, people have a lot of debt,
Oh yeah.
but they also have record equity.
Yeah. Yeah.
So maybe their first mortgage is a really low rate. Maybe it's 3.5%, but they have $100,000 in equity in their home. How can we utilize that equity to take care of all that credit card debt that they have that's at 22%? RV loans, auto loans, boat loans, student loans. There's all these different things out there. And so, again, that's a situation where you may benefit from a refinance even though you've never considered it because you have a 3% mortgage right now.
I need for you to clarify something really quick. Sorry.
No, go ahead.
When you said equity,
Mm-hmm.
I just recently closed with a first-time buyer, and the appraisal came out quite a bit higher than the property.
Mm-hmm.
And she goes, "Oh no, are they going to make me pay that price?" I said, "No," and explained the privacy of an appraisal.
Yeah.
And I said, "No, but that's where you really benefit because you're going into this purchase with equity."
Mm-hmm.
And she had a real hard time grasping all of that. So can you just explain the value of when that happens, what a benefit that is to that buyer, that they've made a very good purchase, but what does that equity mean to them?
Yeah, so you don't see that every day, right?
No.
But in some
Very
cases,
rare.
the price of the home was determined, and they agreed to a price, and then it could be that from an appraisal standpoint, some new comps came on the market since you made your offer and it was accepted. So now the property value is more. Or in some markets right now, the value is going up so fast.
Oh yeah,
Between the time you agreed to a price and you closed, the house appreciated.
right.
So now you have equity in the home. So that equity gives you borrowing power,
Absolutely.
right? So you can borrow in that equity to do debt consolidation,
Right.
renovate swimming pools.
Right.
You know, you can do a home equity line of credit. You can do a home equity loan, or maybe you refinance that mortgage that you just did into a new mortgage at a higher amount and take the money out to do whatever you may need.
Right. Right.
Yeah, I mean, we use home equity to finance college education, swimming pools, debt consolidation, and each individual refinance is going to be a little bit different.
Right.
It really depends on your current mortgage, the rate on your current mortgage, the value of your home, and then all the other things that you have in your financial life,
Right.
credit card debt and things like that.
Right. But that's a very good way, and I was hoping you would explain it that way. Because
Yeah.
it's, when you are a first time buyer especially, and then that happens, and I told her how lucky she was. That was really good.
Yeah.
It's a very good
not
decision.
happen very often.
No.
Not at
Yeah.
all.
No.
Not at all.
Well, have we touched on anything, everything? Because I'm saving my last one for the big one. But I just want to make
Is it
sure
always
that
your big one on this paper?
no,
Okay.
I just thought of it.
Okay, all right. So we want to talk about creative seller incentives, and we haven't
that's
talked
right.
about
Yes,
that yet.
Thank you.
And,
yeah, that's right.
I forgot about that one.
Because
Yeah.
that's
Yeah.
super important.
Yeah, well, it's big. That's why I was like, is it on this paper?
Yeah.
So, but I'm going to let Brandon talk about that one because.
Oh, you're going to bring it up and,
I
and
am.
Yes,
I'm
toss
gonna
it over to
pass
me.
pass the baton.
Yes. You're doing such a great job.
All right, so creative. I don't know if I'd call it creative. Seller incentive. So as a seller, you've got your house listed. You want it to sell for the most that you can get. You're competing with the other homes in the market that are also for sale. So how can you make your home more attractive to buyers out there? And you can do that a couple of different ways. I mean, one way, right, the traditional way is you negotiate, right? You lower your price. I'm not getting a lot of showings, so I'm going to lower my price. One way you can make your house more attractive to sell is by offering incentives. And there's a lot of different ways you can do this. But the one that I wanted to talk about was offering, I'm just going to throw out an example. This is a home. It could be right here in our market. You're getting a $300,000 mortgage. Maybe you're buying a $400,000 home, right? The seller could offer $10,000 in seller concessions, an incentive to the buyer. So the buyer can use this money for their closing cost. But what I want to talk about is using this money to buy down the interest rate. So if you think $300,000 is my mortgage, and let's just use a 7% rate, give or take. Using the seller's $10,000, you could buy your rate down to, let's just say, 6.375.
Okay.
So pretty big difference in 7 and 6.375 on a $300,000 mortgage.
Oh,
Yeah.
So that's going to save you as a buyer about $124 a month. Well, that's nice, but I mean, I don't know, that's not huge. Well, let's look at it over 30 years. Now the buyer has saved $45,000 over the life of this loan by using only $10,000 of the seller's money. So could the seller have lowered their price from $400 to $390? Sure, they could have. That's going to mean $40 a month in your payment, $50 maybe, versus $124 and $45,000 over the life of the loan. So offering an incentive is just another option for a seller.
Right.
Or maybe they're not offering it. They've never mentioned the incentive. You like the house. You want to make an offer. Instead of maybe offer full price and then ask for a $10,000 concession, maybe $15,000 concession. There is limits. It's not unlimited, but it's a big number in some cases. If you're putting 20% down on the purchase of a home, the seller can contribute up to 6% of the purchase price back in an incentive. So, that's a big number.
And so, if he did that 6%, could you take half towards your down payment and half towards a buy down?
Absolutely.
You do half towards your closing cost and half towards the buy down.
Okay.
Yeah,
Okay.
you could use, let's just say that the seller offers $15,000 in concessions, and your closing costs are $6,000. Okay, so I'm going to use 6 of that for my closing costs, and I'm going to use the other, $9,000 to buy down my interest rate. Now, you can do interest rate buy downs a lot of different ways. You can do a 1-year buy down. That means your rate's lower and your payment's lower for the first year. You can do a 2-1 buy down. That means your interest and your payment's lower for 2 years.
Okay.
You can do a 3-year buy down. The one that I prefer is the permanent buy down because your payment's going to stay the same for 30 years. So you're not going to wake up in a year or two and all of a sudden you forgot about all this and your house payment jumps up.
Right.
So this is a permanent buy down. So it lowers your 30-year fixed or 15 or 20, whatever you're doing. It lowers the permanent rate, and over time, it saves you a lot of money.
Absolutely.
So how does that work? Because sorry, trying to get my words together. In most mortgages now, you see the escrow with the home insurance and the taxes and all of that. I mean, you'll see your payment change, but it won't be because of your interest. It'll be because of taxes or insurance went up or, whatever.
Right.
That's
Okay.
right.
Yes.
Okay.
Yeah.
That is,
That makes sense.
yeah, that's correct. So just again, talk to your lender because programs are different on what they allow a seller to pay from a concession standpoint. FHA and conventional and VA and then non-QM, they're all different, and it depends on the loan program and it depends on your loan to value. So are you doing an 80% loan or a 95? So seller concessions generally range from 3 to 9% is what's allowed. That's a big difference. So talk to your lender. A traditional conventional with 5% down, you're going to be limited to 3% of the purchase price is what the seller can pay. But I bring this up because I think it benefits the seller. I think it benefits the buyer, both, because $10,000 on a $400,000 house is a pretty small percentage to offer as an incentive versus reducing the price. The benefit the buyer will receive is significantly more than $10,000. It's $45,000.
Right.
Which is really, really
In
good.
the life of the loan. Yeah.
Absolutely. Yeah. That's really good.
Yeah.
That's wild.
Gosh, this has
I
been
know that's
so
the one I asked the most questions about before the show. Okay. So, we all know
Okay.
the changes that happened back in August of last year with the commission and all of that good stuff. How are y'all seeing it, or how would you prefer to see it if the buyer is having to pay commission? Do you want to see it in their offer, or at least be, because obviously, as y'all know, we have different forms, but as long as it is known in the beginning that, okay, seller is paying buyer's agent's commission of 2.5, buyer is having to pay 0.5% of the commission. Do you want to see that written in the offer, or can it be on like a general addendum, a buyer's agency rep? How, as lenders, how are y'all looking at that, and what have you been seeing?
Honestly, as long as it's in writing somewhere, it doesn't matter to me personally where it is, as long as we have it in the beginning. Because,
Gotcha.
But mostly we see it in the real estate contract.
Yes. Yeah.
So, I mean, as long as we have it in writing up front and we know where the monies are coming from, I think that's the most important thing. But generally, we do see it in the contract. The biggest thing for us is that we need to be able to source those funds, and we don't want to be surprised at the end.
Oh.
Sure,
Oh, yeah.
sure.
You know what I mean?
So, because I know there's been some talk, and there again, it's just been talk, that it may get to a point where the lender will allow the buyer to roll that in on their mortgage. Is there any talk of that on y'all's end?
Not yet.
No.
Okay.
There really hasn't been any changes from a lending standpoint to our
Okay.
guidelines. One thing that in the beginning there was some confusion around is, okay, so the seller is now going to pay the buyer's commission. That is not part of the seller concession limit that the programs have.
Correct.
So that's because the seller paying the buyer's commission is customary.
Right, absolutely.
That's, so
Well, it's
that's
always been
that's
done.
that's the
Yeah.
deal. In the beginning, that we just weren't sure.
Right.
So we've clarified that. So the seller can pay for your closing costs and prepaid items up to a percentage,
Right.
just like always. In addition to that, they can pay for your real estate commission. But if you are going
It
to be
just has to be
paying,
broke down that way.
it does.
Exactly.
If you are going to be paying your real estate commissions directly from your funds, we just need to know so we can incorporate that into our analysis.
Right.
Okay.
And that's, again, every case is going to be different, and we're seeing some variation from state to state in how all this is working.
Right.
But in Arkansas, it's been pretty, I don't know, hasn't been an issue that I know, that I'm aware of. Carissa, you can speak to that transaction.
Well, I
that
can
you've
say
worked.
for us, we've not really seen a change in it.
No.
I mean, us going into explanation and, full transparency, all of this,
Right.
and the sellers are like, what?
Yeah.
Whatever you think will make my house sell.
Right.
Exactly.
You know.
And it's
Exactly.
been like that forever. So,
Yeah.
I mean,
We have had situations where the borrower either was given bad information or assumed that they could add it onto their loan.
oh dear.
And we've had that not in our market here, but in other places where they've been led to believe, in some commissions can be a rather large number, and you can't finance it, not directly.
Well, and that's why I wanted to ask that part, because I've heard it, but I've not seen anything that has proven or backed it up. So
No.
I just thought
there's-
let's clear that up.
There's, I think, probably conversations happening with the agencies, with VA, with HUD, Fannie, Freddie, and others, but nothing has changed. To this point, from our side of mortgage lending, we've not adjusted any guidelines
Okay.
based
Good deal.
on the changes.
Good,
Good deal.
good.
Just as long as it's clear, either in the contract or another document that can go with
Right.
the contract.
Yes.
Yeah. Yeah.
They just
don't
need to know.
Surprise
Right,
your
absolutely.
lender at the end. Oh, and they're paying the
Oh,
3%
yes,
Oh, by the
commission or
way.
whatever.
Yeah.
Because that's got to all be sourced, and if it's on the settlement statement, it's got to be sourced.
Yes.
Yeah, I
yes.
mean, we may structure their loan a little differently, but we need the information up front.
Absolutely.
Yes.
Which I can totally respect and understand. But I just had
Communication's
to-
key.
It is.
absolutely,
And that,
that's
again-
that's my favorite thing.
That's where the buyer and the seller and the real estate agents and the lender are all going to have conversations.
Absolutely.
Yes.
Absolutely.
Yes.
And there again, I mean, on that aspect of it, I think it all boils down to how we, as the agent, communicates
Yeah.
with that seller or communicates with that buyer, and explain, because that's what we're supposed to do.
Absolutely.
We're supposed to, just like you explain what you do, we have to explain what this all means.
Right.
So I don't think we'll have an issue with it as long as we, as the agent on the very front end, explain it all so that it's understood who's paying what and where's that money coming from.
Yeah, absolutely.
Exactly.
Yeah.
And
Yeah.
the transaction fees. Some agencies charge transaction fees. Like, make sure the lender knows about the transaction fees up front. too.
Right.
Oh, I didn't think about
Oh, yeah.
that.
And that has to be shown on the settlement statement.
Yeah. Yeah. So we just want to know. I mean, and a lot of times they range anywhere from $100 to $200, $500. They're not
Right.
huge like a commission could be, but it's still, if you
Right.
have a customer that's tight with their funds to close, it's important to
Absolutely.
know that up front.
That there's not a surprise at the end.
Yes.
I mean,
It's
you
all
would-
about communication. And
exactly. I mean, I would hate to get to closing and my deal fall through for $125
Oh, yeah.
processing fee or
Right.
transaction
Yeah.
fee or
Yes.
whatever. That would be awful.
Yeah, the environment that we're in as lenders and you guys as realtors, the more we know on day one. Really, the more we know before they ever start looking at homes, the better, because insurance has increased significantly, and it's lowered the amount people can qualify for in a mortgage. I mean, in some cases, homeowners insurance has more than doubled. So
Exactly.
if we have an idea of the type of home you're looking at, we can better estimate home insurance, and we're going to get the property taxes. You know, that's is the house currently, you know, have the rebate on it or the discount on it or not? And there's all these different things, and then you know, what's the commission going to look like? The more we know, the better.
Yep.
Right.
Is there an HOA? That's a big deal.
That's important.
That is, I would, good job. Because
We've-
like Fairfield Bay, because they have their mandatory dues. I have actually didn't get the settlement statement to review until sitting at the closing table. So myself nor my buyer had reviewed it. And so sitting down there at closing, and the lender obviously was there with us, and they're like, well, what is this fee right here? And they were like, oh, we forgot to add that, so we added it this morning.
Oh, no.
Yeah, that's just-
Yeah.
And that could be a problem. And
Yeah.
you know, I would encourage buyers, you know, looking at houses, you know, shop the insurance on those houses.
Absolutely.
It could range very significantly from one house to another.
Yes.
Maybe one house has had 4 claims on it. A lot of
There you
people
go.
don't realize, oh, I didn't have a claim on that house. Well, you know, the previous owner did, and maybe the owner before them.
That's
And so
exactly
you may
true.
be able to buy a house $50,000 more expensive for the same monthly payment because the insurance is much lower, or because the HOA is lower. There's all these factors. So
Oh,
again,
yeah. Oh, yeah.
the more we know up front, the better.
Yeah.
Yes. Yeah, for sure.
Because I mean, the client themselves has to do their due diligence just as well as we do.
Absolutely.
So I mean, us all doing our homework in preparation to makes everybody's life easier.
Yeah, and just a best practice that I've done lately, since insurance has changed so much, as soon as they write the offer on that home, I'm like, call the insurance up next. Like, let's make that your next phone call.
Yeah.
Because we
Definitely.
want to know your quote. when
Yeah,
we're
before
putting
we
it all
get
in.
2
Yeah.
weeks
Yes.
in, or
Yes.
I think
and
we have like 10 days in the contract, and I always just say, don't pay any attention to that because you're going to want to shop around.
yep.
Because, you know, they pay
Well,
it,
and
then
that's
you
my
call
favorite thing.
someone else.
Well, I've been with my insurance company for 30 years. I understand. But just like you going and buying a car, or you going and trying on a pair of shoes, you've got to shop around because not all policies are the best fit.
No.
That's true.
And so therefore, this one's going to offer just this little incentive to make you go with them, but that program's not any better than this one, and it's going to be cheaper.
Yeah, exactly.
You know?
Yeah,
So that's
exactly.
what we tell people all the time.
Oh,
Shop around.
Yeah.
Shop around.
And compare coverages, deductibles, coverages, liability, earthquake, no earthquake, sewer backup, doesn't have sewer backup. Flood, yeah. I mean, that's very common in Arkansas. And there's a significant difference in the price of flood insurance
Yes.
from
Oh,
yeah.
one agent to another. So, again, upfront is better than waiting on that.
Yep.
Absolutely.
Yeah. And I mean, there again, if you don't know, as Karissa's been telling me this whole show, that's a good question. It's not a dumb question, but just ask.
Absolutely.
I don't mind
Absolutely.
being, the goober on the show that's asking all these goofy questions, because it's been questions that have been asked to me.
Absolutely.
And
Right.
so therefore, I've always been told in school there's no such thing as a dumb question.
There is
Absolutely.
The
Absolutely.
only dumb question
And
is
that's
the
not-
one not asked.
It's the only way you're going to
Exactly.
learn.
Yeah.
Well,
Ask questions.
and with our clients or potential buyers, we want you to ask the questions rather than stress about it or think something that's not correct.
Yes.
Absolutely. Absolutely. Yeah.
Yeah.
Because they can build up things in their head, just clutter.
Because we all like to make up things in our own brains.
Yeah, that's true.
Yeah.
That's true.
Well, if y'all feel like we have touched on everything, we have actually been live for 2 hours.
Oh, it doesn't seem like that.
We have?
Uh-huh.
Oh, wow. It doesn't seem like that
Does
at
not
all.
seem like that at all.
Yeah. We are 10 minutes shy of 2 hours.
Wow.
This is so informative and so
Thank
good,
you.
and y'all have really, really, really explained it very simply and very clearly.
Yes.
And that's another thing that's vitally important, because sometimes you'll get, just like if you go to a doctor, you know, and they say stuff and you're like, okay, hold on, you get your phone out and you go to the Mayo Clinic to understand what they just said. No.
You
can't do
dummied
that.
it down for us.
Yeah.
That's my favorite thing.
That's very
Well,
good.
because you go to a lot of public places and they throw out
Oh,
these
yeah.
words, just like me asking you about the buy down. What does that mean?
Right.
You dummied it down for me
Yeah.
to catch it, because just me reading it, I didn't know what that meant.
Right.
So that's why I like to say dummy it down for us simple-minded people.
And it's also good to know that we can kind of steer them in the idea that there are a lot of different options that they could have, and that we're not in that business. We're
Right.
realtors, but we know they can explain it to you, whether you're the buyer or the seller. That's vitally important. So very thankful that y'all are able to communicate it in a way that we can totally follow it and understand it.
Yes.
Thank you.
Well, I can absolutely say this is the first show that I've been on that I've taken notes.
Yeah, this
Yay.
is great. Look at
That's
my little
awesome.
page.
Yeah. So
Awesome.
I am extremely grateful for y'all's time coming over and explaining, and it was a great show.
Thank you for having us.
Absolutely.
Yes.
Yeah, absolutely.
And
Thanks
will
for
y'all-
having us.
Will y'all one more time review how to get in touch with you? One more time
Yes.
for our audience so that they'll know, and then we'll provide information too.
Yes. I'm Karissa Clemons. I'm with First Trust Home Loans in Heber Springs, and my cell phone number is 501-766-3739.
Or you can go to firsttrust.com. Google, absolutely
You can
Google.
Wait.
Karissa Clemons.
If you Google Carissa Clemons, and she will come up.
It is. Wait, because I just
It
gave
might
it
be
to
on my
somebody.
email signature.
Yeah, I think it is. It is. It's on there.
Yes.
Yeah, it's on there.
FirstTrustHomeLoans.com.
Yeah.
Okay. Thank
And you
That's
can
great.
do /K Clemons or /B Clemons.
That's great.
Yeah.
Yes.
Awesome.
Thank you.
Thank you,
y'all
guys.
so
You're
much.
welcome. Thanks for having us.
Cynthia, go to work.
Okay, I will. Thank you.